Hello everyone, good morning. This is Rose Jacobs live from the Kalkine studio and you're watching the early trades. Let's get started with our market open report. The S&P ASX 200 is down 0.2% in early trade, dragged down lower by a 1.1% fall in the tech sector. Afterpay has lost another 2.3% to $88.71, with Xero off 1.3% to $140.27. The big banks are helping to soften the losses, with the big four up higher. Supermarkets, Woolworths and Coles are also higher, although the consumer staples sector is down 4.3% over the past 5 sessions, partly due to Woolworths' tumble yesterday. Westpac holds its annual general meeting today. The bank's December consumer sentiment survey was due at 10:30 a.m. Armada Metals lists at 12:30 p.m. The miner is targeting nickel copper sulfides in southern Gabon. Let's look at some of the newsmakers from today. Shares in freight logistics business Cube Holdings are in a trading halt for unspecified reasons. Cube also advised the market today it has completed the sale of its interest in Moorebank Logistics Park to Logos Consortium for $1.67 billion before tax and other costs. The ACCC has previously conducted an investigation into Cube's acquisition of Newcastle Agri Terminal, although it's unclear what the trading halt is related to. Miner South 32 has refinanced its syndicated US $1.4 billion debt facility to a new maturity term in 2026, with the option to extend by another 2 years by mutual agreement. It said the facility had been established as a sustainability-linked loan, with measures related to its commitment to reduce carbon emissions. The miners' shares last closed at $3.81 and are up 46% in 5 years. Credit rating agency Moody's has assigned the newly merged Santos and oil search entity an investment-grade Baa3 credit rating. Santos and said Fitch and S&P had also assigned it investment-grade ratings. Chief Executive Kevin Gallagher argued the rating showed investors the group's balance sheet strength and strong free cash flow. Queensland Pacific Metals has completed a $30 million share placement at 16 cents a share via the issue of 187.5 million shares. It said the funds would be put towards the creation of a battery materials production facility as a vital ingredient for the electric vehicle sector. Prior to the rise, its shares last closed at 18 cents. Corporate Travel Management has flagged another acquisition, saying it will buy Hello World's corporate travel segment with an enterprise value offer of $175 million. The deal will be structured with a $100 million cash payment and $75 million in corporate travel shares to be escrowed for 12 months from the deal's completion. Hello World said its corporate travel business posted normalised EBITDA of $22 million in pre-pandemic financial year 2019, which values the deal at about 8 times historic normalised EBITDA. Insignia Financial, the former IOOF Holdings, has revealed ASIC has launched a regulatory action against its OnePath custody business. ASIC's action relates to an investigation around the disclosure of advisor service fees and alleges that from December 2015, around $4.3 million in fees were improperly deducted from members' accounts. MA Financial, the investment bank formerly known as Moelis, is to acquire financial services and mortgage broking group Finsure for $145 million on a cash and debt-free basis. It will raise $100 million via an underwritten placement to finance the deal at $7.75 a share. In addition, it will offer a non-underwritten share purchase plan to retail investors worth up to $10 million. The bank also said strong capital market activity in financial year 2022 means it expects earnings per share to grow 15 to 25% above financial year 2021, when including the Finsure acquisition. Well, that's all for now on the early trades. Stay tuned to Kalkine TV as we have many more shows lined up for you, sharing live updates across the economy, markets and sectors. I'm Rose Jacobs, signing off.